All right, let's jump right in. We're going to check the pulse of the US economy using one of its most powerful predictors, the Treasury yield curve. And we've got the latest data, right down to the last minute. So let's see what it's telling us right now.
So let's get straight to it. If the economy had a crystal ball, the yield curve would basically be it. The big question is, what is that crystal ball telling us at this very moment? That's what we're here to figure out.
But first, before we dive into today's numbers, let's just do a quick refresher on what exactly we're looking at and why its shape has everyone from Wall Street to Washington holding their breath.
At its heart, the yield curve is really just a line on a graph. It's plotting out the interest rates the US government pays to borrow money for different amounts of time, from as short as 1 month all the way out to 30 years. You can almost think of it as the economy's heartbeat. It's a single line that captures what thousands of investors think is just around the corner.
Now, the shape of that line, that is everything. A normal curve slopes up, which just makes sense, right? You'd expect a higher payout for lending your money for a longer time. That signals confidence. But an inverted curve, that's the one that gets all the attention. It happens when the line slopes down. It's a huge red flag that investors are getting nervous about the near future. And historically, it's been one of the most reliable predictors of a recession.
Okay, so with that in mind, let's do this. Here is the very latest data. Our last 1-minute read on where the economy might be heading. The numbers we're about to look at are hot off the press from August 20th, 2025. This is the current snapshot. This is what the market is reacting to as we speak. And here are the raw numbers. Now, don't worry about memorizing this whole table. Just kind of let your eyes scan down that yield column. See how the numbers dip a bit at the beginning and then start to climb back up? That's our first big clue that we're not dealing with a simple straight line here. Let's zero in on the 2 points on this curve that everybody watches. First up, the 2-year yield. It's sitting at 3.74%. This is kind of the market's bet on where interest rates will be for the next couple of years. And now for the big one, the benchmark 10-year yield. It's at 4.29%. So right off the bat, you can see the longer-term yield is higher than the shorter-term one. That is a really strong signal pointing away from that scary inversion and more towards that normal shape. Okay, so we've seen the raw data. Now for the most important part. What is this snapshot actually telling us about the health of the economy? Let's decode this thing.
This is it. This is the single most important number on the screen, plus 0.55%. This one little figure tells us almost everything we need to know, but what exactly does it represent?
Well, this is the famous 10-2-year spread. It's really simple. You just take that 10-year yield we saw and subtract the 2-year yield. And because our number is positive, it confirms we have a normal upward sloping curve. We do not have that dreaded inversion. And that right there is the big headline for today.
So what's the takeaway from this normal slope? Well, it suggests that investors are generally expecting continued growth and, some moderate inflation down the road. The market isn't flashing warning signs about an immediate recession. Instead, it's pointing toward what economists call normalization, a fancy word for things getting back to a more stable, predictable economic footing.
But here's the thing about the yield curve. You can't just set it and forget it. It's alive. It's dynamic. It shifts with every new report and every change in how investors are feeling. So what should we be keeping an eye on from here?
The key phrase right now is that the data is signaling further normalization. It's pointing to a trend, a move toward a less chaotic, more conventional economy. The billion-dollar question, of course, is whether that trend is going to stick.
So there you have it. That's our up-to-the-minute picture. The economic forecast is looking normal today, but this curve is constantly changing. What will it tell us tomorrow or even in the next 60 seconds? That's what we'll all be watching. Thanks for tuning in.